Yeah, one of the key things we're watching this morning, oil sliding as the energy space feels the weight of the weak economic data coming out of China. This raising concerns that a slowing global economy will reduce demand further for energy products. Specifically, we got economic data out of China this morning that points to this broad-based slowdown. We're talking about data on factory output, investment, consumer spending, real estate. All of that, of course, led the central bank, the PBOC, to cut two key interest rates at a time when we've seen, other major central banks going up. I guess you could argue that this is all, maybe not all, but a lot of this stems from the zero COVID policy. And it is these stop and go policies that just haven't allowed China to get the momentum going towards recovery.
Yeah, certainly. And obviously the economic activity, which covered the first quarter of this year, which China has substantially reopened since that point in time, pointed to just how damaging that was to the world's second largest economy. But at the same time, a lot of the factors that we're looking at in China are still kind of secular trends that were happening before the pandemic as well. When you talk about the government's essentially efforts to deleverage this very, very highly indebted economy, especially in the property sector, right? And the weakness in that area is one big reason why you have a lot of people concerned about the Chinese market. Bank lending is down as part of all of this. And then now that the PBOC is cutting interest rates, you do wonder about whether or not there is this concern that China is also going to get into some sort of hard landing or hard recession, which could have massive spillover effects globally.
Well, and it is to spur lending, obviously, when we're seeing what's happening over in China. You mentioned some other stats here, but it's worth noting youth unemployment. And that's something that we've talked about before in
20%.
China. 20% in July. That is the highest number that we have seen since they began publishing that data. Granted, that's back in 2018, but certainly a lot of factors that are lining up for all of this. Obviously, we've seen some big moves in oil today on the back of it, coming off of the lows that we saw earlier on in the session, but still down more than 3%.